Okay, so let's get right into it. We are diving headfirst into the crazy world of crypto. And a little blast from the past, Trump and his tariffs. You all sent us this article from crypto.news, and it's called, "Is Trump's Tariff War About to Crush Bitcoin and Crypto?" And it's from February 28th, 2025. And whoa boy, is this a wild ride.
Yeah, this really brings to light how crypto, it's not really in its own little world anymore. This article, it paints a picture of
Yeah.
just like global markets just in chaos. And crypto is like right smack dab in the middle of it all.
Right, and we've got like all these different things happening at once, right? We've got Trump slapping these new tariffs on China, and then we have all this tension with Mexico and Canada, and then on top of that, Bitcoin is just like tanking because it kind of feels like 2018 all over again.
Yeah.
But like on steroids or something,
Yeah.
What makes this tariff situation different from, the trade spats that we had back then, at
Mm.
least as it relates to crypto?
Well, I think the main difference here is what the tariffs are actually like targeting. Back in 2018, it was mostly like consumer goods, things that we buy every day. But this time, Trump is like really zeroing in on these industries that are super important to the crypto ecosystem. And one of the biggest ones is semiconductor manufacturing.
So it's not just like hitting our wallets, at the store. This could actually impact like the nuts and bolts of crypto.
Yeah, you got it. Semiconductors, they're like the brains of mining rigs. So if those costs go way up because of the tariffs, it's going to squeeze the miners' profits like crazy. And we could even see like a whole shift in the mining landscape as a result. Maybe even some miners just getting pushed out entirely.
That's a big deal. For the network stability, the article mentions that Bitcoin, like, it plunged almost 8% after the news broke, dipping below $80,000 at one point. It's got to be scary, even for like experienced investors.
Yeah. Oh, yeah, for sure. It's definitely a sign of how intertwined crypto and like the traditional markets have become. It's important to remember that this article was published on February 28th, 2025. So we're talking about like a super recent reaction to something that's still unfolding. And it's not just Bitcoin either. The entire crypto market cap is down something like 25% since the start of the month. And altcoins, especially altcoins, they're getting hit the hardest.
Okay, so crypto is like reacting super badly to all of this, but I thought Bitcoin was supposed to be like, uncorrelated to traditional markets. Isn't that the whole like digital gold idea? If it's this sensitive to what the S&P 500 is doing, does that mean that whole narrative is like just BS?
Yeah, that's a good question, and it's definitely raising some eyebrows. The article's point is that this is a sign of crypto kind of growing up. It's not this isolated market anymore. Over the last year, it's become way more integrated with traditional finance, things like institutional investors. And Bitcoin ETFs are becoming more common, and that makes it way more vulnerable to the same global forces that mess with stock markets.
Yeah, that makes sense. And on top of that, we're not just talking about tariffs, like directly impacting crypto prices, right? There's that whole chain reaction you mentioned. Can you break that down for us?
Sure. So basically, tariffs are like an extra tax on imported goods, which just pushes up prices for everyone. And that, of course, fuels inflation, which is already a big concern as is. Now the Fed has this tough decision to make. Do they raise interest rates to try and fight inflation?
But wouldn't raising interest rates
Yeah.
risk hurting the economy even more? Like, what if that tanks the stock market?
Well, that's exactly the dilemma. And here's where it gets super interesting for crypto. Bitcoin's been acting a lot like a risky asset lately. It's become pretty closely correlated with the NASDAQ and the S&P 500. So if the stock market tanks because of inflation fears and potential rate hikes, well, guess what else takes a hit?
Crypto, it's like it's all connected somehow. But then there's this other layer to it. The article talks about liquidity drying up. What exactly does that mean? And why should crypto investors care about that?
So think of liquidity like the oil that keeps the market gears turning smoothly. When there's plenty of money flowing around, it's easy to buy and sell assets. But when interest rates go up, that easy money starts to disappear. Investors get nervous, and they start looking for safer assets, like the US dollar, which then gets stronger. And suddenly everyone's trying to cash out at the same time.
Like what we saw in February's flash crash, right?
Yeah.
$760 billion wiped out in just 60 hours.
Exactly. That's exactly the kind of danger that a liquidity crunch can create. It can turn a little dip into a full-blown panic.
So to sum it up, we've got the tariffs themselves potentially hitting mining. Then we've got this ripple effect of inflation and interest rates, and liquidity fears on top of that. No wonder the crypto market is freaking out. It seems like the people in the know are shifting their money around too. The article mentions record outflows from Bitcoin ETFs lately.
Right, which tells us that retail investors are starting to get really spooked. But the big question is, What are the institutional players doing? They've poured billions into crypto. Are they going to hold their ground? Or are they about to pull the rug out from under everyone? That's the key question that we're going to try to answer in the next part of our deep dive.
Definitely a cliffhanger. Stay tuned as we try to answer that very question and figure out what all this means for you and your crypto portfolio. So welcome back to the deep dive. I think now's a good time to kind of zoom out a little and look at the bigger picture, you know?
Yeah, I think that's a good idea. You know, the real story here goes way beyond just these specific tariffs that we're talking about. It's about like crypto's changing role in the world and how it fits into everything else.
Right. In part one, we talked about Bitcoin and how it seems to be losing its digital gold status because it's certainly like so correlated with the stock market. Is this like a sign that Bitcoin's safe haven status is just a myth? Like, have we all been fooled this whole time?
Well, it's not that simple. It's definitely more nuanced than that. We have to remember that crypto is still relatively young. You know, it's still kind of figuring itself out. It's like a teenager, you know, going through all these changes. Yeah. And its behavior is going to change as it matures. And as more players enter the game, so its relationship with traditional markets, it can fluctuate. And it probably will. That's just the nature of the beast.
Okay, so it's not a simple yes or no answer then. But the fact that crypto is tanking at the same time as the stock market right now, that's got to be like pretty concerning for the people who thought it was a safe haven, right?
Absolutely. I mean, imagine you're someone who thought Bitcoin was going to hold steady or even go up during like a big economic downturn. You'd be feeling pretty shaken up right now, that's for sure.
Yeah, especially with all those record outflows from Bitcoin ETFs that we were just talking about. Seems like a lot of people are starting to doubt the whole digital gold narrative.
Yeah, it's definitely a wake-up call. It's a reminder that all investments carry risk, and crypto is no exception. In fact, you could argue that. It's even more volatile than traditional assets, so you really got to be careful.
Which makes diversification even more important.
Right.
Like you wouldn't put all your eggs in one basket, in any market, let alone one as crazy as crypto. But what about those institutional investors we were talking about?
Yeah.
You know, the ones that have been putting billions into crypto? Are they starting to get cold feet now? With all this market uncertainty?
That's the million-dollar question. And honestly, the article doesn't really give us a clear answer. Some analysts think that institutional investors are more likely to just ride this out, you know, because they have longer-term investment horizons and they have a lot more money to play with.
So they might see this dip as a buying opportunity.
Exactly. But there are also analysts who are worried that if the market keeps going down, even the big institutional investors might start pulling back. And that could trigger a cascade effect that could push prices down even further.
So we're just kind of waiting to see how they react. But there's another big piece of the puzzle here that we haven't really touched on yet, and that's regulation. How do governments around the world view crypto in light of all this market chaos?
Well, regulation is the big wild card here. And to be honest, it could go either way. On the one hand, clearer regulations could bring some much-needed stability and legitimacy to the crypto market. And that could actually attract more institutional investors and speed up mainstream adoption.
So it would make crypto look more like a real asset class?
Yeah, exactly. But on the other hand, you've got governments who are really wary of crypto. You know, they're worried about its potential to disrupt the existing financial system.
They're probably worried about losing control over monetary policy.
You got it. They could end up imposing these really heavy-handed regulations that would stifle innovation and scare away investors.
So it's like a double-edged sword. Not enough regulation. And the market stays volatile and open to manipulation. Too much regulation. And it could kill the industry's growth.
That's a great way to put it. And all this uncertainty about regulation is just adding to the overall anxiety in the crypto market right now.
It's like adding fuel to the fire.
Yeah.
To recap, we've got these potential trade wars brewing. We've got inflation going up. We've got the possibility of interest rate hikes. We've got liquidity drying up. We've got institutional investors who are on the fence. And then we've got this looming threat of regulation. What does all this mean for the average person who's already invested in crypto or thinking about investing?
Well, that's what we're going to be exploring. In the final part of our deep dive, we're going to delve into some specific strategies and considerations for navigating this increasingly complex crypto landscape, so stay tuned.
Sounds good. We'll be right back after a quick break. To break down what you, the listener, need to know. To not only survive, but potentially thrive in this crazy new world of crypto. Stay with us. Welcome back to the show, everyone. So we've covered a lot of ground here, and honestly, it's been kind of heavy. We're talking trade wars, we're talking inflation, we're talking regulation. It's enough to make anyone nervous, even like the most die-hard crypto fan.
Yeah, it's definitely a reality check. For those who thought that crypto was like somehow immune to all this stuff, that affects the regular markets. But you know what they say, uncertainty breeds opportunity.
Yeah, it's a good way to look at it. So let's talk about what this all means for you, the listener. Like, what are some actual takeaways from this whole deep dive? What should crypto investors be doing right now to not just survive, but actually thrive in this crazy world that we're living in?
Well, I think the first thing is to really let it sink in that crypto isn't in its own little bubble anymore. Your portfolio is exposed to all these global forces, and those forces are changing really fast right now.
So don't just bury your head in the sand and pretend that everything's fine.
Exactly. You got to acknowledge the reality of the situation, and then you can start to figure out how to adjust your strategies.
So like what? What are some examples of that?
Well, one thing is diversification. It's more important than ever. Don't just put all your money in Bitcoin just because it's the most famous one. Look into altcoins, but do your research. Understand the technology. Understand the team behind it. What's the actual use case for this coin? Don't just chase hype.
Yeah, we've seen how badly some of these altcoins
Yeah.
are getting hit in this whole downturn, just blindly following the crowd. Can lead to some pretty bad outcomes.
Yeah, for sure. Another key thing is to try to zoom out from all the short-term noise. Yes, the market is volatile right now, but if you really believe in the long-term potential of crypto, this could be a good chance to buy up some assets at a discount.
So you're saying maybe this is a buying opportunity?
It could be, but I can't emphasize this enough. Only invest what you can afford to lose. The crypto market is still really risky. The potential rewards are high, but the risks are high too.
So don't bet the farm on Bitcoin.
Exactly. Make informed decisions. Don't let your emotions make the decisions for you.
Right. The article mentioned that the analysts are kind of divided on what happens next. Some of them are predicting more drops, while others are saying there could be a rebound. How should the average investor make sense of all these conflicting opinions?
Well, first of all, don't just take any one analyst's word as gospel. Look for patterns in their analysis. Do they have a good track record of making accurate predictions? What's their investment philosophy? Are they focused on the short term or the long term?
So understand their biases.
Exactly. And remember, even the best analysts get it wrong sometimes. No one can predict the future perfectly.
So do your own research. Figure out your own investment strategy, and then use the analyst's opinions as just another piece of the puzzle.
Exactly. You're in control of your own financial future.
Right. And we can't forget about regulation. It's still a big question mark. But it's something that every crypto investor needs to be paying attention to.
Absolutely. Stay informed about what regulators are doing in your country and around the world.
Yeah. Subscribe to some crypto news sources, follow some industry experts on Twitter, join some community forums.
Right. And remember, regulation isn't always a bad thing. Like we talked about earlier, it could actually make the market more stable and more legitimate, which would be good for everyone in the long run.
So stay informed, stay agile, and don't be afraid to change your strategies.
Crypto is a wild ride. It's not for the faint of heart, but if you're willing to put in the work, the rewards can be amazing.
Well, that about wraps up our deep dive into the world of crypto and global economics. We hope you found this conversation helpful.
Until next time.
And remember, this is not financial advice. Always do your own research. And never invest more than you can afford to lose.